Hey everyone, welcome to this explainer. Today we're diving into a massive shakeup in India's financial world, SEBI's brand new Specialized Investment Funds, or SIFs. If you've been investing for a while and you're looking to literally level up your wealth, you're probably wondering, is this the missing puzzle piece I've been looking for? Well, let's break down exactly what these SIFs are, how they work under the hood, and most importantly, if they actually belong in your portfolio.
So, let's kick things off with a pretty relatable situation. Have you ever looked at your portfolio and just felt stuck? Like, on one hand, you've got your standard mutual funds. They're great, right? But maybe they're feeling a little too basic for where you're at right now. But then on the other hand, you glance at portfolio management services, or AIFs, and you see that massive 50 lakh rupee minimum investment and think, no way. You end up caught in this gigantic gap between a simple 500 rupee SIP and these ultra-wealthy financial products.
To really wrap our heads around how SEBI is solving this, think of investing like a three-tier system. Level 1, that's your traditional mutual funds. Super simple, broadly diversified, and great for almost everyone. Jump up to Level 3, and you've got your PMS and AIFs. Highly customized, super complex, but they demand a ton of capital. SEBI realized, hey, there's a huge void right in the middle. And that brings us to Level 2, the Specialized Investment Fund. It's designed to be that perfect middle ground for experienced investors who want more firepower than basic funds, but definitely don't want to lock up 50 lakhs.
Section 1. Meet the SIF, Bridging the Investment Gap.
Okay, so the absolute biggest difference you need to know right away is the entry ticket. To get into an SIF, you generally need a minimum investment of 10 lakh rupees across schemes from the same asset management company. And this isn't random. It's a very deliberate move by SEBI. It brings the barrier to entry way down from that 50 lakh PMS level. It suddenly makes these advanced strategies accessible to a much wider group of affluent investors, without just opening the floodgates to literally everyone.
Because of that 10 lakh entry point, the official documentation makes one thing crystal clear, and we really need to emphasize this. SIFs are absolutely not designed for first-time investors. It's a hard boundary. This product is strictly tailored for high-net-worth individuals, business owners, and experienced long-term investors who already know their way around the markets.
Section 2. Under the Hood. Flexibility and Strategies.
Now, traditional mutual funds are pretty straightforward, right? They essentially buy and hold stocks or bonds. But SIFs, they have an incredible amount of flexibility. Depending on their specific setup, they can invest across equity, debt, real estate investment trusts, and InvITs. But here is the real game changer. They can use exchange-traded derivatives. These are essentially complex financial contracts used for hedging and actively managing the portfolio. Honestly, if the market gets choppy, they can even seamlessly shift into heavy cash positions. They're built from the ground up to actively manage risk and chase returns across totally different environments.
And seeing how they actually deploy that flexibility is fascinating. SIFs can use advanced tactics that sound like they're straight off Wall Street. We're talking long-short equity, where a manager buys stocks they think will soar, but at the same time, short-sell stocks they expect to tank. Or take market-neutral strategies, which actually try to squeeze out steady returns whether the broader market is booming or crashing. Throw in aggressive sector rotation and dynamic asset allocation, and you get the picture. Before now, these sophisticated maneuvers were locked away in expensive AIFs for the ultra-wealthy. Now, they're right here in this new mutual fund framework.
Section 3. The Trade-off. Advantages versus real risks.
Let's weigh this out, starting with the pros, because they are definitely compelling. As an investor, you're finally getting access to complex risk management tools, like hedging, to protect yourself against sudden downsides. And the best part, all of this happens under strict, professional oversight by SEBI. So you're getting high-end, institutional-grade strategies inside a regulated, transparent system, literally for a fraction of the cost of a traditional PMS. It's a pretty sweet deal on paper.
But, and this is a massive but, higher flexibility does not automatically guarantee higher returns. The risks here are very real. These funds are highly complex. Because they play with derivatives, they can actually crank up your portfolio's volatility if the manager makes the wrong call. And here's a totally counterintuitive risk that catches people off guard. Because a lot of these strategies are designed to hedge risk and protect your capital, a SIF might actually underperform a boring standard index fund during a roaring bull market. Yeah, it's a real trade-off between aggressive growth and strategic risk management.
Section 4. The Verdict. Is an SF right for you? When you put traditional mutual funds and SIFs head-to-head, it becomes super obvious that they are entirely different animals.
SIFs are absolutely not meant to replace your standard mutual funds. Think of it like this. Regular mutual funds are your simple, reliable foundation starting at just 500 rupees. SIFs, on the other hand, bring in complex strategies, a moderate to higher risk profile, and demand that hefty 10 lakh entry. They're just doing completely different jobs in your wealth-building journey.
So what's the actual actionable takeaway for us? Well, if you're just starting out or if you're heavily relying on your monthly SIPs to fund your core goals and you don't really know how derivatives work, honestly, just avoid swaps for now. Stick to the basics, they work incredibly well. But if you already have a rock-solid mutual fund foundation, you've got 10 lakh of capital ready to deploy, and you deeply understand market dynamics, an SIF could be a remarkably powerful satellite addition to your portfolio to help hedge and grow that wealth.
Ultimately, SIFs are a really fascinating evolution in India's investment scene, finally bridging a gap that's been there for years. Now, as always, you have to read the scheme documents carefully and really understand the specific strategy before handing over your hard-earned cash. But I want to leave you with this final thought to chew on. Knowing the advanced tactics they offer, along with the real complexity they bring to the table, would you take the leap into a specialized investment fund, or is the proven sleep-at-night simplicity of a traditional mutual fund exactly what you need? Keep learning, keep structuring your knowledge, and we'll see you in the next explainer.